Cameron Brandt is ready. Let's connect with him. Cameron, good morning. Thank you for joining us. Well, last time when we spoke to you, it was bad news. It was bad news. It was only bad news for emerging markets like India. When do you think I will introduce our chat by saying that there is good news, and only good news for emerging markets like India?
Well, it's certainly not quite as gloomy for emerging markets as when we last talked. But the emerging markets that are doing best at the moment are the ones perceived as being geared to Europe. We've had a fairly bumpy period, but it's Europe that has been catching the attention and the flows. That said, the reallocation away from emerging markets definitely seems to be slowing. It hasn't stopped, but there are certainly points of life in the general universe. And it's now the turn of U.S. equity funds to see something of a reversion to the mean. The free pass they got in the immediate aftermath of Donald Trump's election, if not revoked, is certainly being scrutinized. So certainly the past 10 days have not been terrible for emerging markets, but apart from Europe, they've not been dreadfully good for any asset class other, well, gold, I would also accept. Investors have definitely kind of recalibrated on the risk reward side, less willing to just assume it'll all be reward and no risk. But no huge sense of panic either.
There are two scenarios which could be at play. One, money moves out of US, which it is, but it moves to developed markets like Japan and maybe some European markets. That's scenario number one. Scenario number two is that money goes back to India and China. Within that, we can argue whether it will be India or China, but money essentially does not go back to developed markets. Which playbook do you think could be at play?
Well, the first playbook is the one that's currently happening. We've seen a pickup of flows into dedicated Europe and Japan equity funds. Certainly in the case of Europe, there's some value to be picked up there. But some emerging markets are seeing positive attention. So I do expect a move slowly towards that second playbook. Of course, the big wild card is how various trade scenarios play out. But for the moment, it's the first one you outlined, and that's likely to persist for a while, especially if there is some kind of ceasefire to emerge in the Ukraine-Russia conflict. That I think would light an even bigger fire for a while under European assets. But India has had its correction, certainly from a mutual fund perspective, after a year and a half of relentless inflows. We've now seen about 3 months of more outflows than inflows, but valuations are starting to, I think, get to levels where people will be comfortable again and maybe even see an upside.
The other big part, of course, is China, right? And especially after all the announcements coming in, everything from measures to boost consumption, talking about propping up the real estate market, talking about, even raising the country's birth rate. I wanted to know, what is the reality about flows moving into China?
The flows for China have been very cautious lately. After a record-setting spike at the beginning of the fourth quarter, they've generally been pretty low-key in both directions, small inflows or small outflows relatively. I think the attitude has shifted to show me the money. There've been a lot of announcements of this nature. I think Chinese policymakers still have a lot of residual credit from the way they've coped with the previous two crises. But certainly in the mutual fund world, people want to see what's announced actually actually happening. And some of those measures will really take time, especially the demographic one. That's not going to turn around in a few months. But I would expect that's, there will be a pickup in flows towards China again. Recently, what we've seen is people looking for additional Chinese exposure have sort of opted to get it at one step removed, and we've seen a lot of flows recently into Hong Kong equity funds.
Okay. All right, Cameron, appreciate your time. Thank you that you stayed back late at night and just accommodated this call.
If you like this video, then like, share and subscribe to ET Now.